If you have ever looked for any apartment for sale in New York City, you are almost always seeing two types of buildings. Those are condos and co-ops. What is up, everyone? Welcome back to the channel. My name is Sargis. I'm a licensed real estate agent based here in New York City. My goal with this channel is to be a resource for you and give you as much information as I can about New York City real estate. In my previous video, I've talked about the building type that makes up the majority of the New York City residential real estate, and that is called a co-op. In today's video, we are going to take a close look at the building type called condominium, which is the second most popular in New York City. The difference between condominium and any other type of residential building is the form of ownership. We'll go over everything you need to know about buying an apartment in a condo building. What is a condo? What are the steps in a condo buying process? Pros and cons of owning a condo, and what are some important questions that you need to be asking when looking to buy a condo apartment. At the end of this video, you'll know exactly what to expect from a condo building. Let's get started. I will also talk about the differences between condos and co-ops. So if you're not quite familiar with co-ops or you have never heard the term co-op, we have a video that covers all the fundamentals about co-ops. That video will be linked in the description below. Make sure to watch that as well. Condominiums are individually owned residential units where the owners of each unit has a joint ownership in the common elements of the building. When you own an apartment in a condominium, your apartment plus the percentage of the common elements such as the entrances, lobby, hallways, stairways belong to you. You will receive a deed, which is the official document transferring the ownership from one person to another, and you'll have a title to your property, just like if you buy a house or a land anywhere in the country. Condos are great for people who want all the benefits of home ownership with a fewer responsibility. When you own a single family house, you will be 100% responsible for everything, including the maintenance of the house, roof, plumbing, electric, and so on. With condos, you are responsible for your unit. Everything else is managed and run by the condominium association, also known as homeowners association, and all unit owners share the ownership and responsibility for maintaining all the common structural elements and the amenities of the building. Condo association is run by a board of directors who are elected homeowners, and they have a fiduciary responsibility to act in the best interest of the association. Depending on the building, the board typically consists of president, vice president, a secretary, and a treasurer. The board of directors have a certain power and authority to effectively run the association. Another important thing to understand here are the fees associated with carrying your apartment. As we've mentioned earlier, condos are great for people who want to have all the benefits of home ownership with a fewer responsibility, which means you don't have to personally check and make sure that everything runs properly in the building, but you are responsible for your portion of those expenses. This is called HOA fees, which in New York City, we call it common charges. Those essentially mean the same thing, it's just you'll hear the term common charges in New York City. And from now on, I'm going to refer to this payment using the term common charges, since that's what we call it here. Common charges cover operation and maintenance costs of the building, such as the boiler, mechanicals, elevators, and all the amenities such as the fitness facilities, pool, rooftop, laundry room, kids playroom, lounge area, and so on. It can also cover the staff salary such as the doorman, super, porters, and management company fees. So besides your mortgage, this is one of the carrying costs of your apartment, and those payments will go directly to a condo association every single month. The condo association has a specific formula to calculate each apartment's common charges bill. Each year, the board creates a projected budget for all the operation and maintenance costs of the building for that year. Remember, each unit owner owns the unit plus the percentage of the common elements. To get each apartment's common charges bill, the total cost is multiplied by the percentage that a unit owner has in the common elements. The percentage each unit owner has mostly depends on the square footage of the apartment. For example, if your apartment has a 5% ownership in all of the common elements and the total operation and maintenance cost of the building is $600,000 per year, this means that you will be responsible for $30,000 per year payment, which means in this example, your common charges bill will be $2,500 per month. So the bigger your apartment, the higher will be your common charges bill. And the bigger the building and the more amenities the building has, the higher will be the operation cost of the building. The second carrying cost would be your property tax bill. Since condo apartments are considered as a real property, every unit in the building will be assessed individually by a local taxing authority. And since we're in New York City, in our case, that would be New York City Department of Finance. So each unit owner pays their property taxes directly to New York City Department of Finance based on the percentage of the assessed value of their unit. So your total cost besides your mortgage would be your common charges plus your property taxes. In a co-op, it's just one bill called maintenance bill, which includes your property taxes. Now let's talk about the steps it takes to buy a condo apartment. To make sure that you are buying the right apartment in the right building, it is very important to work with a competent agent that has successfully closed a lot of transactions and knows what exactly to look for in order to properly guide you through this process. Your agent plays a huge role in your home buying journey. In this video, we will focus on things that are condo specific. I will make a separate video for apartment search, making an offer, and negotiations. But just know that those are the important skills that your agent should have. Depending on the situation, at this stage of process, your agent can potentially save you a lot of money and make sure you won't miss out on your perfect home. It all depends on how well they deliver your offer to the seller's agent and how well they negotiate on your behalf. So fast forward through apartment search, making an offer, negotiating with the seller, and now you have an accepted offer. What do you do next? Next, it's time for the attorneys to step into the game. In New York City, it is typical and recommended that you have a real estate attorney to represent you in the transaction, and you'll see why soon. The process is the following. The seller's attorney prepares the contract and sends it to the buyer's attorney for review. A few important things are happening here now. While reviewing and negotiating the contract, the buyer's attorney will start the due diligence on the building, and the buyer gets to do the inspection of the unit. Let's take a closer look at those. Due diligence consists of the following elements: reviewing the condo's offering plan, reviewing the building's financials, reading the condo board's past 1 or 2 years of meeting minutes, and submitting an extensive questionnaire to the management. Your attorney will know what exactly to look for, and before you sign the contract, your attorney will give you a detailed summary of the building and the risks associated with you purchasing that specific apartment in this condominium association. I'll just talk about these briefly so you know what exactly is going on. The building's offering plan is a book that is usually a few hundred pages long, and it describes in detail every single aspect of the property being sold for the first time. The building's financials will show what cash reserves are available if the building has an emergency repair or for future capital improvement projects. It will show if the building is operating at a deficit or at a surplus. Maybe the common charges are too high. The meeting minutes tell the story of inner workings of the building. It will show all the topics discussed during the meetings of the board members and all the decisions that were made. After a thorough review of all the available documents, they may have additional questions and might submit a questionnaire to the building's managing agent to find out the answers before reporting back to you. Regarding the inspection of the apartment, this takes place while your attorney is doing the due diligence and negotiating the contract. The condo association is responsible for all major items such as the foundation, plumbing, electric, roof. You are responsible for your portion of those expenses only, which is different when you're buying a house where you will be responsible for everything and no one will share the cost with you. If you're buying in a large condo building that has a professional management, most likely they will not allow any inspection in the boiler room, mechanicals, elevators, or compactor room. But you are allowed to inspect the unit itself. However, if you're buying in a small condo building, in order to keep the common charges low for the owners, small buildings usually are self-managed buildings, and in this case, your inspector will most likely have an access to those areas as well. When it comes to the question whether or not you should do an inspection when buying a condo apartment, the answer is yes. I always recommend hiring a professional inspector to inspect the unit. Most of the time, there is always something that the inspection will discover. Issues with appliances, ventilation or electrical problems, cracked tiles, damaged floors, garden level or duplex with basement access apartments can have flooding, draining, or moisture issues. Top floor apartments can have a potential issue of leaking. These are the things that the inspection will discover. There can be a second round of negotiations with sellers asking for those items to be repaired before the closing, or for money back for you to make those repairs. But be careful when negotiating for these types of concessions. Always talk to your agent. Hopefully they have enough experience and knowledge to direct the negotiations in the right way. Negotiations with inspection issues largely depend on how competitive the market you're buying in is and the terms of your original offer being accepted. This process takes usually anywhere between 1 to 2 weeks, and by the end of second week, you should have the contract ready. Now it's time to sign the contract. The contract will specify all the terms of the transaction and all the work that the seller needs to do to fix any problems discovered by the inspection if you were able to successfully negotiate those repairs into the contract. The buyer signs the contract first and submits a good faith deposit. This money is called earnest money deposit, and it will be deposited in seller's attorney's escrow account, and it will go towards your down payment. The amount depends on the transaction, but most of the time in New York City, this is 10% of the purchase price. This money demonstrates the buyer's good faith and seriousness and willingness to complete the transaction. Once you sign the contract and deposit the money, the seller's attorney will send the contract to the seller for review and countersignature. After the seller countersigns the contract, congratulations, you are officially in contract. And at this point in time, nobody else can buy the apartment. Now it's time to go to the next step. This is the time when your attorney will also order a title search. It's very important because only the person who owns the property has the right to sell the property. Seems pretty straightforward, right?
Not really.
Because the property title that has the owner's name might not have the information about the liens on the property. Beyond confirming that the seller is indeed the rightful owner, title search will also find any financial or legal claims on the property. The seller has the responsibility for resolving any issues with title before closing, and your lender will also require you to have a title insurance because there can be mistakes or document errors that will lead to an important document being overlooked. And it can be costly if after you complete the purchase, you find out that there are judgments against the property, liens, unpaid taxes, or some Joe telling you that he also owned the property years ago that no one knew about it. Title search and title insurance are there to protect you against these types of unexpected surprises. After you have a signed contract, you will start working on finalizing your mortgage if you're financing, and working on your condo board package. This is the time when the bank orders an appraisal to make sure that the apartment is worth the money you're offering to buy. In order for you to submit the board package, you will need a letter from the bank called a commitment letter. If the purchase is all cash, you can just work on your board package. There is no appraisal or bank involved. Board package is also known as purchase application. Board packages for condos usually are not as lengthy as most of the time you see for co-ops, but this depends on the building. Some condo associations may have lengthy applications. They might want to see your financial statements detailing your income, assets, and liabilities, pay stubs, bank statements, last 1 or 2 years of tax returns, W-2 forms, personal and professional reference letters, loan commitment letter, and other bank-related documents if you're financing. And when you submit your board package, this is typically the time when you would pay any closing costs associated with the building. There are condos in New York City that might require some or all of those, and for other condos, it might just be a very basic application with a few documents to sign and provide your contact info. So the information you need to provide in your board package when buying a condo apartment depends on the building. The key difference between a condo purchase application and a co-op purchase application is that the purpose of co-op board package is to qualify the buyers, and the board can approve or reject the purchase. For condos, the board can ask you for information, but they cannot reject the application. During this stage of the process, you will hear the term right of first refusal. This means that the condo board has the right to step in and buy the unit at the same price and terms as agreed by the buyer and seller. When you submit your purchase application, the condo board typically has 30 days to waive their right of first refusal, meaning they are not going to buy the apartment and give you a green light to proceed to the closing table. This is mainly done to control below market sales to friends and relatives, which will decrease the resale value of other units in the building. This process is usually not so simple because it can be challenging for them to raise the necessary capital, and they have to go through certain steps as well in order to exercise their right of first refusal. Other reasons that the condo board might want to exercise their right of first refusal is if they need the apartment to turn it to something else. It can be a common area, it can be an apartment for super, or they can add an extra amenity that will benefit the rest of the community. In reality, it is not common at all for the condo board to exercise their right of first refusal. If the buyer is getting a slightly good deal, it will not likely cause the board to step in. But if the price is shockingly low, then yes, they might. This is one of the major differences between condo board application and a co-op board application. Co-op boards can just reject the application. When it comes to condo, when you submit your board package as a buyer, you are not waiting for approval or rejection. You are waiting for the condo board to waive their right of first refusal. They typically have 30-day period to issue the waiver, and if everything is done correctly, you should have the green light soon and your attorneys can schedule your closing date. Your closing typically is scheduled within a week or two after receiving the waiver from the board, and if you're cleared to close by the bank. Once your closing date is scheduled, the day before your closing or the same morning, you'll do the final walkthrough of the apartment to make sure that nothing has changed since you made an offer, there was no leak, fire, or any other damage to the apartment, and all the work that the seller was supposed to do according to the contract is done before the closing. You'll receive the keys to your apartment, and congratulations, you are officially a homeowner. Now let's talk about some condo rules and requirements. Generally speaking, condos don't have such strict rules and requirements that co-ops have. And if you don't know what a co-op is, what kind of rules and requirements they usually have, and you're still not going to watch the video I have everything about co-ops linked down in the description, I'll just summarize it here. Co-ops have financial requirements such as down payment, DTI, and post-closing liquidity. Debt to income ratio means how much debt you have in relation to how much money you make. Post-closing liquidity means how much liquid assets such as cash or cash equivalent you have after you've paid your down payment and your closing costs. Condos may have down payment minimum, which usually is 10%. But it depends on the building, and lenders may also have different requirements when it comes to the down payment depending on the purpose of your purchase. Are you buying a primary residence, an investment property, or a vacation home? So how much down payment you need to buy a condo apartment depends on the building, your lender, and the purpose of your purchase. DTI and post-closing liquidity requirements don't apply to the condos. Remember, condo boards can ask for information, but they don't qualify the buyers. As long as your lender approves your mortgage for that specific apartment, you're good to go. Condos may have some rules when it comes to renting your apartment, but generally they're not as strict as co-ops. They may have a rule such as renting is allowed after 1 year of ownership, but generally you are free to rent your apartment anytime. Just keep in mind that in New York City, a lot of condos have fees associated with renting your apartment, both for the owner and for the tenant. And the same concept works here as well. Condo Board cannot reject your potential tenant, but they can exercise their right of first refusal, which means they have the right to rent your apartment with the same price and terms as you agreed with your tenant. Everything else that co-ops may restrict, such as co-purchasers, guarantors, gifts, parents buying, and pied-à-terre, simply just don't apply to the condos. You can have a co-purchaser, you can receive your apartment as a gift from your parents, you can use your apartment as your primary residence or as a pied-à-terre, which means a part-time residence. So if you're buying an apartment in a co-op for part-time residents, you have to make sure that the building allows pied-à-terre. Now let's talk about the pros and cons of buying an apartment in a condominium. It is important to understand that this part depends on your specific situation. For one person, one thing can be an advantage. For another, the same thing can be a disadvantage. The first pro would be that there are no potential board rejection or interview process. The building doesn't qualify you based on your DTI or post-closing liquidity. Closing in a condo is usually faster than in a co-op. Rental rules are not as strict, if there are any. But this doesn't apply to short-term rentals. Almost all condos will not allow any nightly or weekend basis rentals through websites such as Airbnb. Since condominium is a relatively newer type of ownership than a co-op, you can find a lot of condos that are modern type of building with all the amenities you need, especially the new developments. Another pro would be that condos are generally not as strict as co-ops in terms of renovation and upgrading work you can do inside your unit. There's always going to be what's called an alteration application, which will be reviewed by the condo architect. But as long as your renovation work doesn't cause any structural damage to the building or neighboring apartment, you should be fine. Whereas co-ops can limit what kind of work you can do inside your unit. These all sound great,
Right?
So what are the cons of buying a condo? The first one would be they are simply expensive. Expensive to buy and expensive to carry compared to the same type of apartment in a co-op. The closing costs are also higher for condos. The biggest cost that you're saving when buying a co-op with financing is the mortgage recording tax. Since condo apartment is a real property, you are required to pay a mortgage recording tax when buying a condo with financing. I'll break down the exact closing costs in a separate video. The other con would be more competition. Since there are no financial requirements to qualify the buyers and no potential board rejection. And anyone can buy a condo, including partnerships, corporations, and LLCs. Less supply. In New York City, there are a lot more co-ops than condos, and it can be challenging to find an apartment that checks off all the boxes, including the desired location, amenities, and floor plan. It is very important to work with a pro agent who first of all understands your needs and your goals to be able to help you and guide you through this process to make sure that you find the right apartment in the right building. It all depends on your specific situation. If you're looking for an investment property, condo without strict rental policy works great for you. But on the other hand, if you want to buy a primary residence and don't have any plans to rent out your apartment, well, in this case, condo without rental restrictions might not be the best option for you. Another thing is paying high closing costs will save you time, since entry and exit is a lot easier and faster, and you don't have to worry about someone rejecting your application or rejecting your buyer when you're trying to sell. I can't go through every single possible scenario here. Just know that always talk to a professional and discuss your specific situation, your timeline, and your future goals. Last thing we're going to talk about here are the important questions you should be asking when looking for a condo apartment. Number one would be, are there any current assessments? The assessments are used to fund the capital improvements in a building. Usually, buildings have financial reserves to handle the small improvements, but if there is any large expense, the board will negotiate multiple quotes, and when they agree with that specific improvement budget and timeline, the board will begin to fund the project. Just like in a co-op, where each shareholder pays according to the number of shares they own in the corporation, in a condo, each owner pays according to the percentage they own in the common elements. The assessments can be either one large payment or they can be paid off for a certain period. Let's take a look at this quick example. Let's say the quote that the board negotiated for the work required on this building's facade and roof is $120,000. If let's say your apartment has 5% ownership in the building's common elements, this means that your portion of the assessment would be $6,000. And if the assessment period is 1 year, you will be responsible for $500 per month assessment in addition to your common charges. In some cases, when you're looking to buy an apartment, the common charges might be within your budget, but there can be an expensive assessment that will go on for another 2 or 3 years. So you need to be prepared and budget accordingly. The assessments are necessary to not only maintain the building's proper condition, but depending on what kind of work has been done, it can also increase the value of your apartment. The apartments in the building that has a renovated luxury lobby most of the time cost more than the apartments in the building with a basic lobby. The second important question would be tax abatement. Since each condo apartment is taxed individually, you might see a beautiful apartment in a nice building with very low monthly taxes. A tax abatement is essentially a reduction of the property tax bill by a local government. There are various tax abatement programs in New York City, and one of them is 421A tax abatement. 421A started back in 1971 and was named after the section 421A of the New York City property tax law. This program was meant to encourage the developers to build multi-unit residential buildings and create affordable houses for New York City residents. Before we take a look at the example, a big disclaimer: I am not a tax professional and this is not a tax advice. Always consult with a licensed CPA or a property tax expert. The property taxes in New York City is calculated by multiplying the taxable value by the tax rate for that property's tax class. New York City Department of Finance has a specific way of calculating the assessed value of the property. They have their way of coming up with this number. Here you can see the annual property taxes for this apartment. This is a real tax bill of an apartment in Manhattan without any abatement. Now let's take a look at another tax bill. The only difference in this case is there is a 421A tax abatement. You can see here the regular assessed value of the property. 421A reduced the assessed value by $86,156, leaving only $369 taxable value, which means multiplying the taxable value by the tax rate will determine the amount of property taxes for this apartment. In this case, it comes out to be $45.28 per year, which is $4 per month. Tax savings can last between 10 to 25 years depending on the variation. Always consult with a licensed professional because just knowing that there is a 421A tax abatement in the building is not enough. There are different terms, codes, expiration, and different phase-out schedules within the program. This is a 25-year tax abatement phase-out schedule. You'll get 100% abatement until the year of 21. Then starting the year of 22, you'll see a 20% decrease of the abatement each year. And starting the year of 26, you'll pay your full taxes. In a situation when you're buying in a year 9, you'll still have a long way to go. But be careful when you're considering to buy this apartment in a year 20. As of the day of your purchase, you still have 100% abatement, but be ready to see an increase in your property taxes shortly. There are many different tax abatement programs in New York City. And to find out exactly how the abatement will benefit you, always consult with a licensed professional before making a purchase. That's it for today. Hopefully you got some valuable information from this video. And one last thing, the videos like this take very long time to plan, film, and edit. And if you made it till the end, tapping that like button will be a huge favor. Thank you so much for watching. Until next time.